Hi guys, welcome back. This is gonna be the video summary of episode 10 of the ICT Mentorship 2022. As always, refer to ICT original content. This is just a refresh if you have gone through the episodes and you want a quick reminder. Here we're going to be talking about the power of 3 and we're going to see some bearish examples. We're going to talk about the daily bias and last but not least about implementing the economic calendar events with the open. So guys, let's talk about the power of 3. In the previous episode we went through the bullish power of 3 and we talked quite a bit about it. And in this case we're going to be analyzing a little bit more in depth the bearish power of 3, which you find here on your right. Important to note is that these drawings actually represent candles, and ICT used to trade with these candle representations in the 90s. Here on your left you can see the bullish and the bearish candle representation and how ICT used to visualize his graphs. He uses a different color scheme than what you can see usually. He uses grays and blacks. He says that that sends a completely different message to his brain. Your emotions are attached to the color red and green that usually represent candles like by default. And here on the right you can see the open, high, low, close bar and a chart of it and how it was represented in the 90s. But let's go back to our candles and to our power of 3 on a daily chart, because this is how ICT starts to analyze it first. So on the left we have the bullish and on the right we have the bearish one. If the bullish one, when we go through time, starts on the left side with the number 1 being actually in a lower position, the bearish one has the point 1, so the first step, actually in a higher position in the candle. And let's go through the bearish one. In point 1, we will expect the opening price at 8:30 New York local time to be near the high of that day or of that session. Point 2, the price will trade higher. Point 3, the price will fall down, making a very energetic move. Point 4, the price will create a new low. And point 5, finally, the price will close near the low of that day. Beautiful, right? The bearish power of 3 has the same moves like the bullish power of 3 that we are seeing in episode 9, but they are simply upside down. How does the bearish power of 3 look like through time? I want to show you my very simplified drawing and I want to show it to you with the numbers. So let me repeat it for you while we are watching the bearish power of 3 through time. In point 1, we expect the opening price to be near the high of that day or of that session. In point 2, we expect the price to trade higher. In point 3, we expect the price to fall down with a very energetic move. In point 4, we expect the price to create a new low. And last but not least, in point 5, we expect the price to close near the low of that specific day. And the big question as always, where do we enter the trade? ICT tells us that for the bearish power of 3, our target for our entry should be the one seen here in red. So we should enter at or around point 2. Our second best entry is actually to enter the trade, so to enter our short, close to where the opening price was. Guys, remember, we do not chase the entry if we missed it. So if we are in point 3 and the price is kind of far away from point 2 or point 1, do not enter the trade. It's not worth it. Power of 3 happens almost every single day and it's better to take the wall move, the wall profit, and have a better risk to reward ratio than to just enter when it is already at half or almost over. Remember, we do not chase our entries. Guys, you remember from the last episode that ICT talks about the power of 3 as being accumulation manipulation, and distribution. And now let's check them out one at a time. Let's start with accumulation. Here in this episode, ICT does not go way too much into the details about what is accumulation, and I think we are going to talk about it more in details in future episodes, but just to give you a preview of what I have understood so far, and here you can see it on the left side in the bullish power of 3 and on the right side on the bearish power of 3. So between point 1 and point 2, the price will start going in the direction in which we are expecting it to go. But then the price reverses and forms point 2. To give you an example, when we are bullish, accumulation at the beginning of the day is gonna make us think for just a moment that actually the price is going higher, but then no, it doesn't. It forms point 2. So it's a tricky one, and I believe we're gonna talk about it more in the later episodes. Now let's pass and talk about manipulation. We find it in the range of the price from point 1 to point 2. Indeed, guys, from point 1 to point 2, it is a Judas swing because the price is going in the opposite direction of the actual move that is going to take later, right? And here the price does exactly that. It's manipulated, so that's our manipulation. And manipulation is indeed the fake run of that day. What about distribution? Distribution is all about smart money's short positions or long position that are being actually distributed, and smart money is simply taking the profits. So it happens between point 4 and point 5. Let's see them one at a time. The bullish power of 3, the distribution lies when the price goes from the high of that day to the closing price, and so it goes a tiny bit lower, and the smart money's positions are being distributed. The bearish power of 3, the distribution indeed lies between point 4 and 5, as we just said, and the price goes from the low of that day to the closing price, and so it goes a tiny bit higher. When we look at the power of 3 and at the bullish and at the bearish powers of 3, keeping in mind accumulation, manipulation and distribution, the biggest question for us, now that we know that our entry should be at around point 2 or more or less at the opening price of that day, we then ask ourselves, okay, but how do we know when we are at point 4? Because at point 4 we want to be taking our profits, and so how can we be sure that we are at point 4? And so how can we act as the smart money is acting and close our positions? ICT tells us to look at the time of the day. It is likely that point 4 will occur around 3:30 p.m. or 3:45 p.m. New York local time. As always, guys, time first, price second. Let's get a quick recap of our daily bias and how we should know to expect the price to be going higher or lower that specific day. And so how should we set our expectations? ICT tells us to always look for previous highs and lows. And remember, for a high or a low to be formed, we only need 3 candles in the proper order. And when we have our highs and our lows, it's time then for us to start looking for fair value gaps, and so for imbalances and liquidity. For example, if as in the examples of the 14th, 15th and 17th of February 2022 that ICT gave us in episode 9, and is also going to talk about it in a moment, if we have just worked the upper end of the fair value gap, then we have multiple bearish shifts. Well, that's probably a big indication of the fact that it's very likely that we should be expecting to see bearish days, and so the price closing lower than it was at the beginning of the day. And indeed, let's go back to our examples. Here we had the price movements on a 1-day time frame, And we are specifically on the 17th of February 2022 in terms of dates, so that you have an idea. Do you remember we had our high and our low and our equilibrium point? And right now we have a bearish bias, right? So we are expecting the price to actually go lower and take out the previous low. Now that we have a bias, we go to the 1 hour time frame. And here on this screenshot, you can see the 10th, 11th, 13th, but specifically 14th, 15th, 16th, and 17th of February 2022. On the 1 hour time frame, we can see some imbalances here. So we see a first big fair value gap and a few others formed. We know that the price has a strong tendency to come back and tap back into the fair value gaps. So we need to keep that in mind. Now let's go to the 15 minutes time frame and let's look more closely at the 16th and 17th of February 2022. We see indeed here again the fair value gaps, and ICT makes us focus on a couple of things here. Within this range you see the higher and the lower end of the fair value gap. After point A, the higher end of the fair value gap has happened. We would expect for the price to go lower, but that's just our expectation, that's just, let's say, our hypothesis. We have to observe and follow the price and see what it actually does. If we do so, what we actually notice by looking at the price is that several times the price is forming bearish shifts in market structure, which then means that our hypothesis is likely or is very likely, and we are looking to see a bearish power of 3 forming here. We set our expectations on the 1 day, on the 1 hour we look for imbalances, and here again we are trying to understand if our hypothesis, if our expectations are right or not. Guys, keep always an open mind. We never know what the price will do on one specific day, and we can just have a good analysis that gives us some hints. And then we go and we search for the patterns that we have an idea how they look like. Do you remember that Dare Hunter story from the beginning of the mentorship? Exactly like that. Knowing how the power of 3 looks like, expecting it to form, we go and we search for it and we wait for it forming. Let me zoom in on the 17th of February 2022. Right now, as we just said, we have a bearish bias, so we are expecting the price to go lower and to take out the previous low. Look at it here, guys, look at it on a naked chart. Can you see the bearish power of 3 playing out on the 17th of February 2022 for the Nasdaq 100 E-mini futures? If you want, you can stop a video for a second and try to find your levels, your points yourself. When you're ready, press play and I'm gonna show you where I see the power of 3 in play. Look at it here playing out, guys. We have number 1 forming at around midnight, which is the midnight New York open price. Then the price does exactly what we would expect, which is it goes a little bit higher, it forms a fair value gap, it comes back lower, and it goes and it taps back into it. And after that it rallies down, so that's our point 3. I believe that in this case, in the afternoon, we have our point 4, and indeed around 4:30 p.m. New York local time, we're gonna have our point 5, and so the closing for that day, after all the positions of the smart money have been distributed. Now, something that made me laugh when I heard it for the first time, and that ICT also explains very briefly in the previous episode. He says that if we take the range from point 1 to point 2, the range of the price, the movement of the price, and we project that range twice from the high of that day, going lower because our bias of course is bearish, we will find approximately what we see in point 3. So let me show it to you actually with colors. If we take the range from point 1 to point 2, which you can see here in red, right? and we project that range twice, so that measure twice from the high of that day, let me do it 1 and 2, we're gonna find approximately, but quite precisely, what we see in point 3. And guys, in point 3 we see a fair value gap forming and the price tapping back into it and then going even lower. The precision of this market is incredible. It really is mind-blowing. And now let me zoom out for us, and always looking at the 15 minutes time frame, we can see here that ICT signed with a beautiful eye the sell side liquidity. So the sell side liquidity for that day. Can you see the precision? It's crazy. Now, if from the 15 minutes time frame we drop to a 5 minutes time frame, we are going to observe some swings high and swings low. You can see the first swing high in red, the following swing low in orange, and last but not least, you can see that the market takes them both away, and that's the blue circle. What you should notice here is that the bearish move, the market, the price taking away all the liquidity, is really sudden, is energetic, is something that happens very quickly. Now let's drop to the 4 minutes time frame. And on the 4 minutes time frame, the candles are a little bit more prominent, so we can see it with a little bit more precision. You see here the even distribution of the price, the little breaks where the distribution of the price is not completely even. And you can see here on the 4 minutes the fair value gaps. ICT shows us his paper trading account directly on TradingView, and he shows that, as you can see here with the arrows pointing down and then pointing up later on, they are circled in red, that ICT takes a short position exactly where those candles enter and where the price enters in the fair value gap, and he takes out his money exactly like smart money would do. And that's a beautiful example of the power of 3, the bearish power of 3 on the Nasdaq E-mini futures. And after that, ICT shows us his paper trading account on TradingView. I advise you to recheck it out if you feel like. It happens around minute 45 of the episode 10 of the ICT Mentorship 2022. Now it's time, guys, to talk about the economic calendar. ICT uses forexfactory.com, but he says that we can use any other type of economic calendar. The main thing is to really be aware of when the news are happening and avoid sudden rushes of volatility. Remember that when there are news, we cannot predict exactly where the price will go. The only thing that we can know for certain is that there is going to be a huge volatility, and sometimes it's going to be in our favor, but it's really like gambling at that point. So ICT advises us to not be trading when there are big and important news. Here a screenshot of the 15th of November 2022 from forexfactory.com. You can see the date, you can see the time, the currency impacted by it if, for example, as myself, you're trading Forex, and the type of news in the different colors, and last but not least, which type of news is it going to be. The different colors on Forex Factory shows us the size of the impact of that specific news event. It can be a high impact news, a medium impact, or a low impact news. That, for me, and that's my interpretation, simply means that when a news is of high impact, the volatility is also going to be high and the market movements are going to be higher. And for example, a low impact news, I would expect to have lower volatility and a lower impact than I would have with a high impact news. ICT tells us that some news are really used to move the price. Other news instead are used to build up or drop by right before the report of the news, and then the price comes back up. and only after we see the real move taking place, so keep it in mind. Guys, I hope you enjoyed this episode, you had a good time, you understand a little bit better the power of 3, the bias and the economic calendar, and let's keep going, let's not give up. This is the way. If the challenge that we are facing doesn't scare us, then it's probably not that important. And I don't know you guys, but I am a little bit excited and scared about the ICT mentorship. So let's keep going, let's put in the work.